Well, Petmin's full-year headline earnings per share improved 9% to 19 cents as its operations performed well and generated cash in a difficult economic environment. For a look at the business and the numbers, we're joined in studio now by the group's COO, Bradley Doig. Thanks so much, Bradley, for joining us today.
Pleasure.
Well, turning developing assets into cash-generative assets, I mean, that's pretty much been your strategy, putting forward a solid balance sheet as well. How much of a challenge has it been sticking to that strategy in the current economic climate?
Well, it has been a challenge, but I think we've stuck to our guns. We've had a plan. We've stuck to our strategy of investing in commodities that go into the urbanization chain, if you so to speak. We've invested a lot of money, if you've seen, in Somkhele over the last year. 500 million rand's gone in. And it's all, and we think that we position ourselves very well for the future. Current market conditions on the export market are quite tight, but we don't see locally, we're seeing no fall off in the demand for our products. So we're comfortable with the strategy. It has been tough. Make no mistake, but we're comfortable with where we are, and I think we'll reap the benefits going forward.
Bradley, you say that the export market's looking quite tight at the moment. You've doubled your production from your anthracite, your core anthracite operation. But I noticed it was sort of slightly disturbing that you say you anticipate selling 900,000 tonnes of anthracite, but 300,000 tonnes will remain sort of unsold. So you've got a 300,000 tonne extra capacity. And that tells me two things. Firstly, that the world's economies are slowing down, and secondly, that it might pose a problem for you in the future.
I mean, I can see where you're coming from. I think from our perspective, we believe that the market will be there. We don't see the demand cycle falling off completely. Our major export market, and this is very much around the export market, that additional capacity is to the South American steel producers. So and there is a softening at the moment, but we believe long term that we made the right investment. We believe that that market will come back. Our local sales have been solid. We don't see any fall off in demand there. So while we are producing below our capacity, we continue to invest in Somkhele for the future, and we firmly believe that's the right thing to do.
What about the prices, the international prices? Have they suffered with other sort of bulk commodities?
Absolutely. I mean, we've contracted. Fortunately for us, we've taken a view that to de-risk our business as a small company, we locked ourselves into some long-term contracts at fairly good prices. Our prices are 20% above the market on some of our contracts, which is quite good. And those are take-or-pay contracts, which obviously assist us in the quality of our earnings. And in addition to that, but there's definitely a fall off. I mean, to give you an indication, we see our pricing between $90 and $100, and 3 months ago you're looking at prices of $120. Mm-hmm. So there's definitely a fall off in line with the anticipated fall off on prices on iron ore, and I see BHP came out with some news today.
Absolutely, I was just going to say, It's interesting that you make this kind of commentary about no fall off in demand, for example, where we've had BHP saying demand for iron ore is likely to grow at a slower pace, but high prices of the past will just not happen again. So your comment to that kind of rhetoric that's out there?
No, look, I think BHP, I mean, they definitely have the facilities to be able to do the analysis. But from our perspective, I think what you've got to do is aim to be at the bottom end of the cost curve. And I think all of our operations that we've owned, that we've sold, or that we're currently developing, we believe are at the bottom end. And at the end of the day, that's the space you want to play in. So investing for the future in those kind of projects, the commodity prices, it's volatile. So you want to be at the bottom end, and you want to make sure that you can lock in prices for a reasonable degree of time going forward. Mm-hmm. We don't play the spot market. Sorry.
It's not exactly the most stable business, is it, resources? I mean, and you make that point. You've increased your dividend by 25%, which we must applaud, of course. But at the same time, you mentioned that you've kept money aside for certain projects, and at the same time, you sort of temper that enthusiasm by saying, the sort of exploration that we're involved in is risky. I mean, and that's evident by a couple of impairments. Maybe you could tell us about those.
Yeah, I mean, I think the point is we have 3 projects offshore. One is in Canada, one is in Liberia, and one is in Turkey. The Canadian one is looking very, very good, and we obviously want to accelerate our investment in that, as we've said in our press release today. The Liberian one also very prospective, but it's a lot earlier. It's a much more greenfields project. So we'll evaluate our position in that as we go forward over the next 6 months. The copper project we had in Turkey, we did our drilling as you do, and the results didn't yield what we anticipated. So we take the impairment on that and you move on.
So it's about knowing when to cut your losses at the end of the day.
I mean, and again, if the grades aren't there, you know, the geology is the geology. You ain't going to change it.
What's your success rate though for exploration, and what kind of investment criteria do you use for project selection?
Our project selection, I mean, we're quite rigorous. Obviously, we look, first of all, it's got to be scalable. So we look for something that ultimately, being at the bottom end of the cost curve, can also yield a plus minus $30 million, profit before tax. That's the kind of numbers we look at. And it must be able to be brought into production within 36 months of acquisition. So we've got very rigorous processes. I mean, in those three, evaluating the three investments we've made offshore, we probably looked at 100 different projects. So coming down, and I suppose you can say, well, 30% success failure rate is not too bad in the exploration environment, given the current market conditions as well.
Bradley, you're an anthracite miner. That's the bulk of your business. We talk every single day on CNBC Africa about the platinum miners and the gold miners and iron ore and everything else. So bigger companies than yours. But the fact is, you're a resources company and you face the same problems that even the big boys face every single day. It's labour, it's regulation, it's slowing international economies. Just how difficult has it been over the last year or so to be a commodity producer in the Republic of South Africa and in a couple of other jurisdictions as well?
No, I would say, the recent events have obviously created a difficult environment for us, and it's obviously been building over some time. But I think our simple philosophy, and it's because we're quite small and under the radar screen, is that we stick to our guns, we stick to what we know well, and we carry on with our business. And it is difficult, but one of the key things we focused on, and it's in all of our strategy right from when we started, is that to develop relationships with your community on the ground and the people the operational environments within which we operate is absolutely critical. And our management team on the ground at Somkeli in particular has done an exceptionally good job. So we have very good relationships with our communities, with our labour, and I think that's assisting us in this, let's call it, tricky environment at the moment.
With government, I mean, you're an exploratory company, and with that, you're going to need, new mining right orders for expansion and exploration into new mining areas.
Fortunately for us, we've just been awarded an extended mining license, so we're extending our reserves and resources for another. We have an operation that can last for 20 years now, based on that new order mining right that we've just been granted. And it's a process. I mean, all the mining companies can obviously do is, if there's a set of rules, and you must adhere to the rules and do your work properly. And I mean, that's all we've tried to do. We don't take any views. We just get on with what we have to do and act accordingly. I think that's really our
Good luck on the road ahead. Thanks so much for joining us this afternoon. Bradley Doig, COO of Petmin.